G'day everyone, welcome back to Pete's Investing. Today is May the 16th, 2023. This is the Euro US dollar update. On our weekly, we're showing a neutral positioning of going long or short, but on the daily it's showing a bearish signal. So let's look at each of these. So again, on the weekly, the triple moving average of the price chart, moving average 3, 5 and 60, is showing a slightly negative or bearish outlook. Likewise on the CCI 150, moving average 5 and 50. Now because of they're not aligned fully because this needs to drop below this moving average, so that's showing a neutral signal, not a bearish or a bearish one, not a bearish or a bullish one. It's just showing a neutral positioning, so avoid going long or short primarily. But on the daily, you can see there it's actually broken to the downside, so there is a bearish signal on the daily chart. So if you're inclined, you can trade on the lower time frames bearish only. Now I've also drawn this support at 95.35 down the bottom here and a key resistance at 110.76. Now it has actually bounced off that resistance a couple of times and now tracking toward down through this descending diagonal line. Well, actually it's hovering above this ascending one as well, but it may break to the downside, and I'll explain what that means in a minute. There was also this Fibonacci retracement, and it got halfway between, or this one actually came down to almost the 38% level, but then it recovered after that and kept going towards that and bounced off that resistance a number of times. Now on the hourly, there is a couple of things happening here. Again, it's tracking along this ascending diagonal, but more closely you'll notice there's a bullish divergence on the CCI versus a bearish divergence on the price chart, and I'll explain how to trade that possibly. If you're inclined to, but again, a bit of history going back to this one. There was a bearish signal on the CCI versus a bullish signal on the price chart, and the way you would have traded that, as an example, would be to draw a channel between those highs and the lows between that. So none of these apply, it's mainly in this little area here, and you would trade that as long as the CCI keeps falling, which it did. You would trade it when the price broke below that channel. So you possibly could have entered it there or even there. Let's look at it more closely. And the way you would actually trade that as a target, let's pick that low there to that high. So if I zoom in, you can see there, had you gone short at that period there when it broke below the channel, you would have set a target close to the, well actually came and broke through the 68%. So you would have had a very minor break to the downside. Now, in this case, it did recover a bit, then it fell off again. So it actually came and bounced off the 78%. So you've got to be very careful where you draw the Fibonacci's and where you draw these channels when you actually try to execute it. This one here is a slightly different scenario here. This is now a potential bullish scenario. So potential is going to bounce off this ascending line. And the way you do that is we don't need to draw a channel to the downside, we need to look at it from the upside. So if this breaks to the upside and bounces off this ascending line and the CCI continues to move to the upside, then you want to potentially place a long trade there. Now just be mindful, be very mindful. The daily is showing a bearish signal, and likewise the weekly is also breaking down and looking potentially bearish. So again, these divergences are generally short-lived. They don't necessarily mean a full-scale reversal of the price, but potentially if you were going to trade this, trade when it breaks above this channel, as long as the CCI does break above it. And where you would place a target, let's draw it from that recent high to that low. So a potential target would be, let's say you entered it somewhere around there long. Potential target may be 50% or even a 61% or possibly higher, but to be conservative, depending on how risky you are, I'd go for the 50% or the 61% at max. Because again, remember we're in a bearish scenario on the daily, and this could be just a little bounce to the upside, like it did back here, and then continue further decline. So again, take very small profits if you can, or if you want to be really strict, avoid taking long trades against the trend, which is one of my rules. But I'm just telling you in terms of how to trade the divergence. I'm not necessarily telling you to buy this one or sell this one at the moment. So to understand this trade, this strategy and others, refer to my links in the description below for the Patreon page. We do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.